Good afternoon. We are doing it live, getting right down to business here. Mottek On Money, live on 790 KABC, streaming live online or worldwide at KABC.com, and your on-demand Mottek On Money podcast, KABC.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Mixed finish for stocks today. The S&P 500 is at a record high. We started the day with the S&P 500 and NASDAQ at all-time highs. The NASDAQ ended a bit lower today, down 81 points at 20,892. The S&P 500 edged higher by 4 points, good enough for a record high above 6,300 at 6,309. And the Dow also popped today up 179 points at 44,502. This on the latest earnings news, including General Motors issued a tariff warning, also weighing on the latest trade developments. They see the yield in the 10-year note now at 4.35%. The market's bouncing off earlier losses after the president announced a new trade deal with the Philippines. Bitcoin edged higher today. It's up around 120,000 now. Solana moving above 200. Doge at 27 cents. We're following the cryptos here. We'll get a crypto update later this hour, coming off of Crypto Week last week with Jason Nelson, reporter at Decrypt Media, decrypt.co. Gold holding above 3,400 at 3,442. Platinum getting close to 1,500, and silver just shy of $40 an ounce. Earnings news today included General Motors, Philip Morris, RTX, formerly Raytheon, Lockheed Martin, moving lower after their quarterly results disappointed analysts on Wall Street. Coal's got a pop today, up $3.92 at $14.34, a jump of 38%. Looks like Open Door, which got that pop this week, pulling back 33 cents today at $2.88. The home builders also in focus today. Pulte Group and D.R. Horton soared today after the home builders reported earnings that came in on the upside, better than analysts had expected. Pulte Group up about 10%, while D.R. Horton shares also got a pop. Among defense names, Northrop Grumman moving higher after raising its full-year forecast, and Raytheon moving lower after cutting its 2025 earnings forecast. Trump Media stock moving higher today, the highest we've seen since, about a month ago, while Bitcoin was gaining today to close to 120,000, getting close to the all-time high it hit recently, above 123,000. Following all of this closely, and the home building stocks, we'll take a closer look at those. The iShares U.S. Home Construction ETF closed higher today on the jump in the home building names. And how are rents looking here in Los Angeles these days? 6 months after thousands of homes and businesses were destroyed in the horrific firestorms in January. I'll talk about that and a report that says cash-strapped L.A. area cities are now asking private donors to help immigrants pay rent following immigration law-related ICE raids. I'll talk about all that later this hour with Daniel YUKELSON, the executive director of the Apartment Association of Greater Los Angeles. But first, on your money, the markets, the whole works now. Joining us live now, veteran market strategist Art Hogan, chief market strategist at B. Riley Wealth Management, which happens to be based right here in Los Angeles. Art Hogan, thank you very much for taking the call here this afternoon.
Well, Frank, thanks so much for having me. It's great to be back in touch with you.
Wonderful to have you with us here, and so much going on an hour-by-hour basis here, including this earnings parade today, tariff news, and looks like crypto's still holding up pretty well here. Give us your view of what's been happening here.
Yeah, I think there's three things going on, and I think you hit them all on the head. So I think, first and foremost, the earnings in general, if we look at about 75 S&P 500 companies that have reported thus far, have been better than expected. Now, expectations were quite low coming into the quarter because there was no real guidance given during that fog of the trade war in the first quarter. So we came in with expectations for mid-single-digit growth. It's closer to 10% growth right now on an earnings basis. Thought we'd see about 3% revenue growth. We're seeing about 6% revenue growth. And that's with about 75 companies having reported already. We're going to see another 100 companies report this week, so we'll have a much better picture. But thus far, we're off to a good start. Now, the second thing is, as far as crypto goes, I would certainly say that Crypto Week in Washington and passing the Genius Act has certainly put a tailwind into all things crypto. Certainly, stablecoin has the conversation around stablecoin has led the charge here, and I certainly think that along with that is enthusiasm for crypto in general in an administration that certainly appears to be very pro-crypto. Third thing is, as it pertains to trade and tariff, it's interesting that if, in fact, all of the tariffs that are known right now with the letters that have been sent out and the tariffs that are stated, we're back to where we were in April, and the market's not freaking out. I think the market's come around to the fact that, we're going to lead with our best hand and then consolidate down to a place that's more manageable. So I think that we started in April 2nd with Liberation Day, and then we had 90 days to sort things out. We did the framework of a deal with the UK, and that was basically a 10% reciprocal tariff, some noise around the edges for steel and aluminum, and some carve-outs for specific industries. And that was our assumption for the rest of the world, ex-China, when China was going to be significantly higher than that, called 30%. And then the noise since then, and the market's recovered quite a bit since then, but the noise since then has been more bark than bite. And we're kind of hoping before August 1st, and even if that gets pushed out a bit, like China has to August 12th, and I believe that the end of the trade war will certainly look a lot better than it looks right now. And I think markets are waiting for that and not getting to the place they were in that first week of April where we had that quick downdraft. So I think there's more good news than bad news out there. We're getting closer to the end of the trade war. We certainly passed a bill that continued corporate taxes where they were from the Tax Cut and Jobs Act back in 2017. And we're starting to see the effects of deregulation as a real positive for markets. So I think there's more good news than bad news. But coming into the earnings season with stocks priced at or near all-time highs is difficult. So home builders certainly were not priced at all-time highs. And any good news there, we're going to see the kind of reaction we saw in Pulte and the rest of the group. But if you look at the banks last week, all of them had beaten raises. All the major banks did a great job in the quarter, but the group was up 25% over the course of the last 30 days. So you're coming in a precarious position where even if you beat and raise and give good guidance, when you're priced to perfection, it's hard to get that positive reaction out of the earnings.
On the live with veteran market analyst and market strategist Art Hogan. Thank you very much for that thorough analysis here, and it's great to speak with you behind live microphones here once again. Certainly, NVIDIA has seen an impressive run-up, pulling back today, though, by more than $4 at 167. What do you make of this latest move on the downside for NVIDIA after this sizzling run-up and the Mag 7 overall?
Yeah, I would tell you that's NVIDIA, obviously the champion of this AI revolution, and I'm sure you talked about that with my friend Dan Ives when you saw him last week.
Oh, yeah.
I would tell you that the Jensen Huang is really in the catbird seat in terms of all of the money that's being spent. The CapEx is being spent to develop large language models. So it goes right through NVIDIA. So it's their game to lose. But with the stock up as much as it's been up, nearly 60% since its lows on April 8th, you've got a stock priced very well, and coming into the fact that we've got a couple things going on. There's a bit of profit taking in the general NASDAQ mega cap technology stocks today, and some of the more popular names like Palantir also fell under a little pressure. And I think some of that money was being diverted to places like the same cohorts that were taking profits there were likely part of the meme stock revival that we saw in a couple of names. You mentioned them both, Open Door and certainly Kohl's department stores, which had massive moves. So not surprising that you're seeing a little of the froth come off the top. I would say in the case of NVIDIA, it's got a lot of runway in front of it. It's learned to be the lead. It's making the picks and shovels for this gold rush that is AI and will continue to do well. And unfortunately, it's one of those reporters that's about a month after the regular reporting season. So we won't know exactly how they're doing, but we certainly will know when we start to hear from the hyperscalers like Alphabet, who's going to report in the next 24 hours, and Microsoft and the rest of the Amazons of the world about how much they're spending on NVIDIA chips. And that'll give us a pretty good picture in terms of the health of NVIDIA and its earnings growth.
As you beautifully laid out, a lot of the uncertainty has now been lifted as far as tax policy is concerned with that so-called big, beautiful bill passing and signed into law on the 4th of July. And looks like this Crypto Genius Act has now been signed into law as well. We're awaiting a couple of other bills. Now a little bit more uncertainty here on the tariff front with these deadlines coming up. And it looks like the tariff uncertainty especially impacting the auto names, General Motors and Stellantis, we heard yesterday pulling back. And what are your market monitors who are here in the background saying about the auto stocks here?
Well, I would tell you this. The auto stocks are on the tip of the spear as it pertains to tariffs, right? So the auto tariffs are the highest, and the steel and aluminum tariffs are the highest. So the ability for autos to somehow moderate the impact of tariffs is going to be very difficult. So I think that as we sort of approach what's the worst case scenario, the auto industry probably sits right there. But that said, I would say when you look at the multiples that all of the major OEMs are trading at, whether it's Stellantis or Ford, General Motors, they're basically at the lowest multiple that we've seen over the course of the last 20 years. So a lot of this is priced in. And to a certain extent, these tariffs are supposed to protect the auto industry. Unfortunately, the way they're laid out now, the way we import parts and they cross between Mexico and the United States and Canada so frequently, there's going to have to be a better workaround to make this workable and make these companies profitable. You can't start a new auto plant and start manufacturing automobiles in the United States at the flip of a switch. So I suspect at the 11th hour, we're going to have some kind of carve out for the auto industry and make this less rigorous on them. But it's all about tariffs right now. Stellantis was the first to point that out.
Very interesting. What about Tesla and all the drama surrounding Elon Musk and the White House and so forth? Tesla today moving higher, up nearly 4 today to 332 and change. What about Tesla here?
Well, Tesla's finally getting around to the place where, A, we know that Elon Musk is not working at Doge or in the White House. We know he's working, 20 hours a day on the 7 companies that he runs. We know he's trying to make all of them successful. And we know that one of the dreams for Tesla owners is the fully self-driving vehicles and the taxi, right? Rolled out in Austin, being rolled out, excuse me, Frank, in San Francisco. And I think that's the real end game. I think Tesla owners of the shares want to see autonomous driving, and they want to see the fully autonomous driving taxis successful in Austin, likely successful in San Francisco, and they'll likely put about 1 million miles in both those cities on the road over the course of the next 2 months.
On the air live with veteran market strategist Art Hogan at B. Riley Wealth Management. Also, the defense names have been in focus. We see Lockheed Martin taking a big hit today, down about $50, back to $410, a drop of about 11%. And RTX, formerly Raytheon, down a couple of dollars today at $149.17. With all this geopolitical uncertainty out there and still a lot of nervousness around the world, what about the defense names here?
Yeah, you're looking at a group, the defense names, the aerospace and defense names, that were the lead group in the S&P 500 because of that geopolitical uncertainty and the fact that all of the NATO countries, including Germany, have decided they're going to spend a whole lot more of their defense budgets. So this is a group that's coming into reporting season up something like 40% on a year-to-date basis. That's the problem. That's the exact description of you can't say enough good things to rationalize your valuation. And, the investors are looking at this as a chance to take some profits in a group that's been red hot.
What about the precious metals? We're watching gold move back above 3,400 this week. We got silver near $40 an ounce and platinum getting close to $1,500. What about that?
Yeah, silver's really making an interesting move. If you look at the chart on silver, the gold-silver ratio has been out of whack for about 2 years now, as gold has had a 2.5-year move off a very long base and continues to make a new high on a monthly basis. Silver has not, and it's starting to make a move. I would keep an eye on silver because it's got a lot more catch-up to do. And I think in general, the demand factors for gold remain the same. Central banks want to have it on their balance sheets, so they continue to be buyers. The ability for you and I to buy it through an ETF, the GLD, is probably the easiest it's been in the last 20 years. So access to gold with plenty of uncertainty over both inflation and geopolitical concerns is another demand factor here. And especially when you look at the dollar, trading off 10% on the year-to-date basis versus a basket of 17 other currencies, gold seems to be the favored way to play, that security that keeps you asleep at night in your portfolio. And we're seeing a lot of people allocate that way.
All right, we got that big Fed meeting coming up at the end of the month. What do you think is going to happen? Any surprises? The expectation is here that they'll stand pat, but a lot of drama between the White House and the Fed these days, and the pressure for the Fed to lower rates. What do you think is going to happen, and what's your outlook for rates at this point?
Yeah, I think the Fed's as confused as all of us are by the fact that the tariffs haven't shown up in the hard data yet, right? So we had a CPI and a PPI report last week. We'll get a PCE before the Fed meets. That's the preferred inflation gauge. While goods prices have snuck higher, especially those things that are affected by tariffs, things like furniture and apparel, the basket of goods, things like shelter costs have come down, housing prices coming down, owner's equivalent rent is coming down, energy prices are down year over year. So the basket of goods have kind of kept the inflation in check. So with that as one of the drivers, the Fed has two mandates, and one's stable pricing and the other is full employment. And at 4.1% unemployment, they don't have an argument to do much. They know they're too restrictive, but I think they're just waiting for enough data to say these tariffs are going to be a drag on the economy, and if that's the case, we should be less restrictive. My guess is they don't cut until September, and they cut again in December. Will probably be 50 basis points lower. I think that'll be good for a lot of things, not the least of which would be 30-year conforming mortgages and start to open up some activity in existing home sales.
About a week ago, we saw the yield on the 10-year note move up to about 4.5%. It's back down now to, last time I looked here, 4.35%. Any thoughts about the latest moves in the bond market here?
Yeah, I would say the Treasury market 4 weeks ago, maybe the last time we spoke, was trading at 4.68. Then everyone assumed that was going to, because it got there so rapidly, everyone assumed that was going to 5%. That's where it peaked. That's a lower high than the last peak it had, which was 4.75%. So Treasury yields are making lower highs, and now they're making lower lows. I think we're in a 4.25% to 4.5% range until we get through the third quarter, yield on the 10-year. I think we exit this year 3.75% to 4.25% in that range. All of that's good news. And I think that the yield on the 10-year is a reflection of the fact that we've started to get our act together on trade. Once we get to the end of that, we've got a budget passed, we've raised our debt ceiling, and we certainly are going to be throwing off a lot less regulation. So I think the 10-year yield probably continues lower. We'll probably be stuck 4.25% to 4.5% for a little bit here, but I expect that we exit this year 3.75% to 4.25%. That's going to be very good for mortgage rates.
We got the Conference Board's leading index of economic indicators that was a bit concerning. What's your outlook for the economy this year?
Well, I'll tell you this. So the first quarter, we had negative GDP. That was all because of the front-loading of purchases by both businesses and consumers of goods. So our import-export numbers were a detraction that put us in negative territory in GDP. If not for that, we would have been 1.5% positive. Second quarter is running at about 2.5%. I think we exit this year somewhere between 2% and 2.5%, which is above the average, which is 1.9%. And then I think we accelerated into 2026 once we sort of anniversary all of the noise around tariffs and the economic data that surrounds that, and the Fed starts getting into a place where they probably take another 50 basis points off in the first half of next year. So I suspect we're, kind of at average economic growth, 2.5% for this quarter, negative 0.5% for last quarter, and exit the year, call it 2 to 2.5% GDP growth. That's okay. That's enough to drive earnings. But I think 2026, when we start focusing on that, we'll be back to that pace that we saw for the last 2 years, where we're closer to 3% growth, with a lot of the things that have been headwinds turning into tailwinds. Less regulation, unknown quantity, that is the corporate tax rate, and certainly having anniversary to a lot of that one-time price increase that are tariffs.
Before I let you off the hook here, Art Hogan, any specific places where you are putting money now and or taking it off the table?
Yeah, I'll tell you three things. So first and foremost, when you look at the Mag 7, and you kind of have to take Tesla out of that now because there's so much noise around Elon Musk and whatnot. But if you look at the other names in that group, I would say one of the underperformers this year has been Apple, and I think Apple's going to surprise everybody. When they make an announcement, either it's a big acquisition to accelerate their entrance into AI, or they decide who they're going to partner with and not try to build their own large language models, because I think that's the only thing that's holding them back. And that'll probably come at the same time that they roll out the next version of the iPhone, which will have AI on it. So I think Apple, one of the most shareholder-friendly managements in the world, is underperforming here. I'm a big buyer of that. I'm also a buyer of Amazon. So of the Mag 7, those are my two favorites. Another group that I would not ignore here are the small caps. They've underperformed for 4 years, and the table is set for them to do really well. Interest rates coming down, we suspect, by the end of this year and into next year. Their earnings multiple as compared to the S&P 500 is as wide as it's been going back to 2020. So we like the small caps. Where I would be careful would be anything that's on the ultra speculative end of the range. All of these quantum computing names, all the uranium names, all the things that have just piqued everybody's curiosity and are trading on multiples that are just unfathomable. I think that group should be avoided. It's exciting for a bet or a lottery ticket. It's certainly not an investment. And the other thing I'd be careful of right now is the consumer staples. They're still a little bit expensive here. They got very defensive in the first quarter, and the multiples got up to 22. They're down to 18. They usually trade at 16 or 17 times. So avoid the staples. Don't drift into the ultra speculative end of things and any of the hyper exciting things that have to do with uranium and quantum computing. They're fun to talk about a cocktail party, but it shouldn't be part of your portfolio.
Terrific. I hear the analysts chiming in. The King Cavalier, the Spaniels, famous on your social media feeds, and we'll be looking for them. Art, thank you very, very much for taking the time to join us. We thank them as well for joining us live here. That is Art Hogan, Chief Market Strategist, B. Riley Wealth Management, based right here in the City of Angels, Los Angeles. We are live here on 790 KBC. Mottek On Money continues, 790 KBC. Good afternoon. The Dow popping today up 179 points, selling at 44,502. The S&P 500 edged higher by 4 points, good enough for another record high close today at 6309. The NASDAQ slipped 81 at 20,892. That index had started the day at an all-time high. The yield on the 10-year note at 4.35%. That one has been easing this week. Gold above 3,400 this week once again, right now hovering at 3,442 and change. Silver on a roll, up nearly 12 cents now at $39.67 an ounce, getting close to $40 an ounce. And we see platinum moving closer to $1,500 an ounce, right now at $14.81 and change. The home building stocks got a boost today, including D.R. Horton moving up more than $22 at $153 and change. Pulte at more than $12 at $121.17. NVIDIA pulling back from its all-time high, down $4.35 at $167.03. And Tesla moved higher, up nearly $4 at $332.11. Checking the cryptos now, we see Bitcoin hovering just below 120,000. Ethereum at 37.20. Solana is above 200 at 202, and Doge at 27 cents. And now the latest news on 790 KBC.
Hello, my loves. It's Lala Kent. Yes, that Lala. And if you're not listening to the Give Them Lala podcast, here's what you're missing out on.
I stayed with my two kids. Mom and Kristen shared a room, and you and Landon shared a room. What the hell is going on? A lesbian couple, a gay couple, and then this
random woman with two kids.
So weird, but to me, it's the most common thing. This is my brother, his best friend, and my mom and her best friend. This is just how we roll. This is called the pod, okay?
Give Them Lala. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KBC. Good afternoon. What's up, you ask? Well, the answer, of course, nothing but the rent. A couple other things are up too, but we're going to focus on rents now. How are they looking in L.A. these days, 6 months after thousands of homes and businesses were destroyed in the horrific firestorms in January? We'll get an update on that. Also, cash-strapped L.A. area cities are now asking private donors to help immigrants pay rent following immigration law enforcement action. Joining us live now is Daniel YUKELSON, Executive Director of the Apartment Association of Greater Los Angeles. Daniel YUKELSON, thank you very much for taking the call. It's been a while since we've chatted behind live microphones, so love to get you an update from you on what's happening out there.
Well, thanks for having me on, Frank. You had mentioned rents. Rents in certain areas of the LA area are softening a little bit. It's taking a lot longer to lease up certain locations. Certain areas still continue to be strong, on the west side, particularly those areas that are near some of the wildfire-affected areas. But in many locations, it's quite a bit of softening. And so owners are now finding that they need to provide incentives to drop the rents a little bit, and so forth and so on. It's not I wouldn't describe it as an extremely strong market. And there's a lot of other factors going on there, including people that are just leaving the LA area or leaving California in general.
On there live with Daniel YUKELSON with the Apartment Association of Greater Los Angeles. Immediately after the firestorm, at least anecdotally, we were hearing about dramatic rent increases on the order of close to 10%, I believe, by one of the calculations I saw. What did happen over the last 6 months, and you think the prices are easing now?
Definitely are easing. There had been claims about price gouging. A lot of those so-called price gougers were people that were new to the rental market who may have had a second home and putting it on the market to help people that were impacted by the wildfires, but just didn't really understand the complicated regulations that we have to deal with. In other cases, it was owners who determined that people needed homes with furnishings. They lost everything, And so they may have been charging one price before the wildfires, went out and rented furniture and raised the rent by more than 10% to cover their actual cost of providing the furniture. And those people got called out and got threatening letters from our state attorney general because they did that.
On the line with Daniel YUKELSON with the Apartment Association of Greater LA. And fast forward to the present, now with the ICE enforcement actions happening. What impact is this having on the rental market here in the Los Angeles area?
Well, that's very, very unfortunate. I know personally a bunch of people who are here legally, and, they've been scared to come out of their homes and go to work. It's something that has really been temporary. People, were unwilling that I know, were unwilling to come out of their homes for, a few days to maybe a week or so. Frank, I deal with thousands of rental property owners in the greater LA area, and I've not had one report to me that a tenant has been unable to pay rent because of these ICE raids. I'm not quite sure that it exists. It certainly, this issue does not exist on a very, very large scale. And, these local governments that are now asking for private money to help immigrants impacted by these ICE raids pay their rent, it's unfortunate that most of these local governments, the County of Los Angeles and the City of Los Angeles in particular, are wasting their money on what they call as right to counsel to provide free legal representation to renters who cannot pay their rent for whatever reason and are facing eviction. It would have been far better use of the money to pay the rent that's owed. And on average, that typical eviction is started with $2,500 to maybe $3,000 of rent owed, but these cities have chosen to waste their money and spend 3-4 times more than that on paying for private attorneys. And it would be very simple to set up a rental assistance fund with that money rather than direct it and make attorneys rich in the process. So, that's one of the problems. And I like I said, I have not had any reports from any of our members who've said that their tenants are unable to pay rent because of these ICE raids. In addition, the county enforced a eviction moratorium that just ended on, I believe, July 31st, that if tenants were impacted by these ICE raids, they weren't able to be evicted. So I'm not really sure this story that's being perpetrated by public radio exists.
Interesting. Yeah, we saw the report saying local governments such as Los Angeles, Long Beach, as well as the LA County area asking philanthropists to fund cash assistance programs. The goal is to use private dollars to help families affected by the raids pay for rent and other expenses. And we may be hearing more about this this week. Where do things stand? I know you filed a lawsuit against the city during the COVID days. Where do things stand with the rent freeze and people didn't have to pay rent for a long time? Where do those lawsuits stand at this point?
Well, it's kind of like dealing with the Department of Motor Vehicles when it comes to dealing with our court system. And so those cases are still progressing to this day, Frank. And we fully intend to seek damages for our members who were out, what we estimate to be about $3 billion of lost rent increases during COVID. And so we're continuing to pursue that case. We're also part of a group that filed another case, 2 of our members of the plaintiffs, to try to just overturn the rent stabilization ordinance in the city of Los Angeles on constitutional grounds. And we are trying to prosecute that case today. We had a couple of elderly members who lost tens of thousands of dollars of their retirement savings because they had to cover the costs of non-paying tenants for nearly 2.5-3 years during COVID. And so we intend to fully prosecute these cases all the way up to the Supreme Court, where we feel that'll be the final place that we will get a fair hearing.
Well, thank you very much for that comprehensive update on what's happening on the rental scene here in the Los Angeles area. That is Daniel YUKELSON, Executive Director of the Apartment Association of Greater Los Angeles, live with us here on Mottek On Money on 790 KABC.
The United States Soccer Federation presents the U.S. Soccer Podcast.
The United States have the lead.
The United States in full command.
To the back post, settled, scores! Centering, doubling his tally.
Never miss a game.
Hooks it across, into the middle, and there's the opening goal. 2 for the United States.
Never miss a moment.
Barreling in, cutting in, going for goal, deflected and in! Yeah!
The U.S. Soccer Podcast. Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC, coming off a crypto week last week. We see Bitcoin edging higher today, up around 120,000 again. It hit an all-time high above 123,000 last week. Solana has moved above 200 today, and Doge now back to 27 cents. Let's bring in the crypto expert here, crypto reporter Jason Nelson, reporter at Decrypt Media at decrypt.co. Jason Nelson, thanks very much for coming to the line here this afternoon.
You're back.
All right. Did you survive a crypto week? Give us an update on all the exciting things happening.
Well, we've had, it was very interesting to see how it all played out. Just about all of the bills were passed, primarily the Genius Act related to stable coins, which was one of the more contested bills, but it went through and it looks like we're in a new regulatory framework for the United States.
All right, so we saw some reaction already last week with Bitcoin hitting an all-time high, and looks like it's been bouncing around since then, but now at last check up around 120,000. What's your reaction to these latest price moves, and what are your market monitors saying about where things go from here?
Well, Bitcoin was already heading to 120,000 leading up to Crypto Week. The fact that it stayed there and it seems to be holding in that relative area was actually kind of surprising because, you would think that people would be trying to take some type of profit right now, but that could also be attributed to how many Bitcoin treasuries are being established, and it's holding the price relatively steady. What we're looking at right now is the broader market implications. For example, people are now wondering when more of these ETFs are going to start being approved. Other cryptocurrencies like XRP have hit all-time highs, and people are wondering, okay, when is altcoin season starting? And XRP hitting its all-time high at this first all-time high in 7 years is leading people to believe that it's right around the corner.
On the line with Jason Nelson, reporter at Decrypt.co, Decrypt Media, following the cryptos with us here. Ethereum has also seen an impressive run-up this year, right now above 3,700 at last check. What about Ethereum here? And now Ethereum getting new attention here. Ethereum crypto treasury to go public in some kind of a deal. Can you give us an update on that headline we've seen today?
There is it's a company called Ether Machine, and they're debuting on the NASDAQ with a $1.5 billion stash of Ethereum. It's about 400,000 Ethereum, and it's just another example of these Bitcoin reserves, because they're not just a treasure trove of cryptocurrency. It's also companies and entities behind them, and they're really starting to try to flex their muscle.
All right, let's take a look at some of the other names. Solana has moved above 200. Are we at a record high for Solana, or is that back to where it was previously?
Solana is a record high, and the thing is, when you're looking at these cryptocurrencies right now, is hitting an all-time high shouldn't be looked at as a one-off anymore, like something that happens maybe once every few years. Like we saw Bitcoin hit 4 or 5 all-time highs leading up to Crypto Week. So it's not as surprising as it used to be. But it's interesting to see just which cryptocurrencies are hitting these new peaks.
All right. Any specific ones getting your attention these days that have had meteoric rises? Remember, Doge, by the way, is at 27 cents here, well off its all-time high, which was, in the low 70s when Elon Musk went on Saturday Night Live a few years ago and talked about Doge publicly for the first time, right? And then Shiba Inu famously had that meteoric run-up, and certainly people are hoping lightning is going to strike twice here.
Yes, and with Dogecoin, it's interesting because Dogecoin is, I think some people forget that it's the original meme coin. It started the whole trend of basing a cryptocurrency on something as opposed to just a currency, and it's been holding its not only its use, its place in the crypto zeitgeist. And now it's starting to move with the rising tide of the rest of the cryptocurrency market.
Very interesting. And, of course, we were also watching the various crypto-related stocks move higher in all this with the miners and also the various ETFs. They've been getting a boost, too. Have you been tracking those as well?
With the ETFs, you're starting to, well, like I said earlier, we're starting to see people really questioning when these other ETFs are going to start being approved, if and when. We already had the Bitcoin ETFs. You have Ethereum ETFs. People were clamoring for an XRP ETF, a Solana ETF. Whether or not those get approved, it really depends on how the SEC and other regulatory bodies now see cryptocurrency, now that there's actually laws on the book related to cryptocurrency in the United States. I wouldn't be surprised if you start seeing more of these altcoin-related ETFs getting approved, but right now that remains to be seen.
All right. Anything else crossing your desk at the moment? What's at the top of your website right now? What's the hottest news in crypto here this afternoon?
Seeing if Bitcoin gets back to 122,000 seems to be what a lot of people are interested in right now. It's getting close, but we'll have to see if it actually makes it back above there.
All right, we'll be watching it with you. Jason, thank you very much for taking the call here. That's Jason Nelson, reporter at Decrypt Media at decrypt.co, covering the crypto world very, very closely, as we are too these days, of course. Live with us here on Mottek On Money on 790 KBC. Let's see if we can bring up the latest prices here before we sign off this afternoon. We see Bitcoin at the moment at 120.054, Ethereum at 37.44, XRP is at 355, Solana at 205, and Doge at the moment at 27 cents. Stay tuned now for the 790 KBC News Blitz with my buddy Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Hello, my loves. It's Lala Kent. Yes, that Lala. And if you're not listening to the Give Them Lala podcast, here's what you're missing out on.
I stayed with my two kids. Mom and Kristen shared a room, and you and Landon shared a room. What the hell is going on? A lesbian couple, a gay couple, and then this
random woman with two kids.
So weird, but to me, it's the most common thing. This is my brother, his best friend, and my mom and her best friend. This is just how we roll. This is called the pod, okay?
Give Them Lala. Follow and listen on your favorite platform.